Okay, let's stick with gold because it's glittering, and so is Kalan Jewelers after Citi maintained the buy call and raised the target to 770 rupees a share. Varsha joins us to tell us more about that note. Varsha, Kalyan, but all the other jewelry stocks also a buzz on the back of this note.
Well, yes, Harsh. So shares of Kalan Jewelers are up. Actually, if you see, 33% in the last 1 year. But Citi believes that there's more steam left. They've maintained buy and increased target price of for rupees 770 versus 650 earlier, which implies an upside of 17%. Now, this target price is based on 60 times the expected earnings per share for June 2026, which is set at an 8% discount to Titan, which has a superior profitability, scale, balance sheet, and more importantly, track record. Citi's optimism on Kalan Jewelers rested on better demand trends and cut in the custom duty. As we all know, in the Union Budget 2024, Finance Minister announced a custom duty cut on gold and silver to enhance domestic value addition in gold and precious metal jewelry in the country. Now, the target multiple is set at 60x versus 52 times earlier, given broader re-rating in the consumer discretionary sector. Although Kalyan's, if you see, financial performance has been bit volatile in the recent years, but Citi believes that there's ample room left for the stock to re-rate, provided there's a steady execution. Although certain factors related to specific stocks, like potential selling of shares by private equity or the liquidity may impact the earning, the PE or the valuation for the stock.
Okay, thank you for that, Varsha. Dipen, views with regard to some of these jewelry stocks flying away. TBC is up 20%.
Yeah, I think they all have got wings over here. And for so many years or quarters when these companies are listed, there was a huge arbitrage or a valuation gap between these listed jewelers and Titan. And now finally they are playing catch up. End of the day, these are the poor man's Titan stocks. And with Titan kind of slowing down, feeling the pressure of competitive intensity, call it base effect, call it mild consumer demand issues, these companies have come back into focus. And investors are looking for new consumption-oriented ideas. And I think the new listings certainly have caught the imagination over here. So you may see these companies also do pretty well. But I think they have played out pretty fine. And I'm not comfortable with the valuations of these companies. End of the day, I've not seen, even after listing of these companies, I've not seen that kind of secular growth momentum which we saw in Titan. So I'm not prepared to pay a higher P multiple. But for the time being, I think they are great trading ideas. And we have a wedding season coming up, which should be exceptionally good. So these companies also should do very well. And there's no doubt that one very important trend which we have observed in the last couple of quarters is the actual volume of business or the growth rate of this tier 2 jewelry companies has been higher than Titan. It was always otherwise Titan being higher than these companies, but that seems to have got reversed. I don't know whether it will continue or not, but I think a lot of the upsides have got played out and these stocks are no longer as cheap as they were a few months ago.
Okay. Dipan, point well noted. And thanks for bringing it up. But so I'm just trying to get clarity here. I heard you mention that you will not give the multiples that were given to Titan to the others and that they've run up as well. So therefore, imprudent to buy or put fresh money to work into these names is what you're saying?
That's right. I think you summarized it pretty well.
Okay, I did. Great. Okay, fair call. Thanks for that, Dipan. But Harsh, come in because it's not just the jewelry companies, the gold loan companies, because of gold price hikes, have also done well today.
Well, yes, they are buzzing in trade. We did highlight some of those at the start of this show. But gold financiers in general have been in focus. If you look at the last 24 months, the way in which gold has rallied, there you go. Gold prices, September 2022 at $1,633 an ounce. This is prices basis ounce, international gold prices. The rally has been very, very solid. And some of these gold financiers have moved alongside the way in which gold has moved, especially Manapurram. Manapurram also the lower valued of the two between Manapurram and Muthoot. So why does that typically happen? Because growth has been extremely strong. Let's take a look at the size. The book size of Manapurram, March of 2022, roughly 30,000 crore. And Muthoot also very similar kind of trajectory. So 50% growth for both of these. Look at the kind of growth that they've clocked. Manappuram from 30 to 45, Muthoot from 65 to 98. So just the kind of tailwind in terms of growth that we've seen kind of starting to reflect on both valuations as well as the run-up in the stock price. So talking about valuations, Manappuram at 1.25 times price to book. Muthoot, of course, the more expensive of the two. The rally has been lower in Muthoot as well. And the 5-year average, Manappuram is still higher than what it is currently. Muthoot, of course, has flown away in comparison to its 5-year average, at least 10 to 15% higher in terms of 1-year forward price to book versus its 5-year average. There you go. That's Muthoot currently 1.8% higher. And if we can pull up Manappuram, that one's really flown away. So that's 3% odd higher. Depend if I can come back to you on this one. Gold financiers, of course, we spoke of jewelry stocks, but gold financiers in particular, growth is extremely strong, especially the Q1 number in particular was very impressive. Do you expect this tailwind to last, and is this a better play than some of the other jewelry stocks that you are slightly more dovish on?
Yeah, you're right. I think certainly there's valuation comfort for these gold financiers, Muthoot as well as Manappuram. And frankly, I think our preference would be for Muthoot Finance, which has withstood the stress in the sector far better than Manappuram. And Manappuram is now not just gold financing, it is also microfinance and several other finance products. And that's a large portion, I think 30-40% of their loan book. And that's growing faster than the gold loan book. But end of the day, what we are finding even in gold financiers is heightened competition from a lot of the banks as well. So one needs to keep that in mind. And it's not as I would say, rosy a business as it was maybe a few years ago. So I would say that when it comes to NBFCs, you have choices. And I would say that microfinance is a better choice than gold financiers. Although one should brace yourself for a couple of soft quarters because of higher provisioning. But I do feel that when you take a 3-5-year type of a view, I would say that microfinance companies are still the best bet within the niche NBFC space. And gold financiers, we have seen a lot of volatility in their earnings, and that may perhaps justify a lower P multiple. So I know that gold prices have gone up, but as I said, the competitive intensity is pretty strong. So I would give gold finances a pass. Within the NBFC space, despite poor performance in last quarter, we are quite positive on the microfinance companies.
Okay. Kunal, before I come to gold financiers, let me try and ask you on TBC, what's up over there just with regard to the traction that we are seeing today, 20% higher?
Yeah, I think overall we are seeing that the rally has been very sharp. If I just look at the past 4 months, from almost 100 rupees, the stock is now at 327. So clearly a steep rally what we have got, nothing to do so at the current levels. If you are holding from the lower levels, continue to hold it, keeping a trailing stop loss of 303 on the downside, but no fresh entry at the current levels.
And on some of these gold financiers, the rally has again been quite solid, at least if I zoom out a little bit. And of course, given the kind of Q1 growth number, the rally at that since then has also been strong. What's your take on some of those from a technical perspective, Kunal?
See, I think definitely both. I think Muthoot and Manappuram both have seen good amount of attraction in the last 1 week or so. Specifically, if I talk about Manappuram, this is one which still has a room upside which is left. So clear cut, that could be a buy from the current levels. A good on the verge of a breakout stock. 220 is the immediate resistance what I see on the upside. Once that is taken out, we expect 235, 240 levels on the upside easily. So clear cut, Manappuram is something which would be in the buy favor from the current levels. Lower end support is at 201. So as long as 201 is not breached, we expect this momentum to continue in gold finance companies.